Imagine opening up a financial report. Right. And you see that a company's total revenue just cratered by like 40% in a single year.
Oh, yeah. Never a good feeling.
Right. And their net income flipped from a solid profit to this massive multi-million-dollar loss. Usually, I mean, that is the exact moment you'd expect the CEO to get on an earnings call, offer some really somber apologies, and, announce aggressive
Yeah,
layoffs.
that's the standard playbook.
But today, we are looking at a situation that completely breaks that mold. The CEO gets on the call, casually declares the underlying business is stronger than it has ever been, and then, get this, affirms a massive, aggressive revenue growth projection for the very next year.
It's the kind of paradox that really makes you do a double take. You just rarely see that level of confidence staring down a 40% top-line drop.
Exactly. So welcome to today's deep dive. It's April 1st, 2026, and we are digging into a fresh stack of sources released just yesterday.
Right, the Q4 and full year 2025 earnings report.
Yeah, the earnings report, the press release, and a really detailed conference call transcript from Intermap Technologies. For you listening, this isn't just, a standard earnings review.
No, not at all.
It's really a masterclass in why you absolutely have to look past the headline numbers. We're going to pull apart the hidden mechanics of global government contracts, dive into this massive global fight for data sovereignty.
Which is a huge topic right now.
Huge. And we'll look at the brutal yet incredibly lucrative mechanics of transitioning a business to a high-margin recurring revenue model. Okay, let's unpack this. Let's start by ripping the Band-Aid off and looking at the ugly top-line numbers from 2025.
Because they are pretty shocking on the surface.
They really are.
Yeah, I mean, they look brutal if you stop at page 1. Intermap's total revenue for 2025 fell to $10.6 million.
Wow.
Yeah, that's a massive step down from the $17.6 million they pulled in during 2024. And if you zoom in on just the fourth quarter, it looks even worse.
How bad?
They generated only $1.6 million in Q4.
Oof. And that leads right down to the bottom line, right?
Yeah.
They reported a net loss of $6.7 million for the year.
Right.
And remember, they posted a $2.5 million profit the year prior. So if you're just a casual observer skimming the headlines on a finance app, you'd assume the wheels were totally falling off the wagon.
You really would.
But management came right out of the gate with a very specific defense. They are explicitly stating these are delays, not lost contracts, just delays.
Right. And there's a huge mechanical difference between losing a client to a competitor and having a signed, funded client who just hasn't paid you yet.
Definitely.
The decline is almost entirely tied to these massive follow-on awards for a major program in Indonesia, alongside several big U.S. government programs. The transcript goes into the weeds on this, making it super clear that the U.S. delays were directly tied to the federal budget process.
Like the government shutdown we saw.
Exactly. The shutdown just bottlenecked everything.
Okay, well, let's pause on that because, government delays is a classic corporate excuse.
It is.
But I read through the CEO's comments, and I want to try an analogy here for you listening, just to explain the actual mechanics of what's happening. Think about it like a defense contractor building a highly classified facility.
Okay, I'm with you.
The money has already been appropriated by Congress. The funds exist. The blueprints are approved. But because of a government shutdown, the final signature required to actually unlock the escrow account is just sitting on a furloughed bureaucrat's desk.
Right.
The money is literally in a lockbox. The contractor did the work, but the key is just missing for a few months.
That's a much better way to conceptualize it than just, late payments.
Yeah.
Because government procurement, especially when you're dealing with the U.S. Department of Defense or a sovereign nation working with the World Bank,
It's totally different.
it does not operate like the commercial world. There's no credit card transaction. The money has what they call color.
Color.
Yeah, it's earmarked, it's funded, they are in final contracting. But the bureaucratic friction to actually release those funds is immense.
But here is my pushback on that. Bureaucratic friction kills small companies.
Oh, absolutely.
Right. If you are waiting 6, 9, 12 months for the government to find the key to that lockbox, a normal microcap company would bleed out. I mean, you still have to pay your engineers, your server costs, your rent.
And what's fascinating here is Intermap actually engineered their way out of that exact trap.
How?
If you dig into the cash flow statement, they didn't bleed out at all. They isolated their continuing business operations.
Meaning what? Exactly.
Meaning they stripped out the noise of currency fluctuations, changes in working capital, and the cash they actively chose to invest in new fixed assets. When you look at that core operational metric, they maintained cash flow break-even.
Wait, really? With a 40% revenue drop, their core operations were still breaking even?
Yes. They actually improved cash flow from operations by 30% compared to the prior year.
That's crazy.
I know. They figured out how to tread water perfectly, while the bureaucratic machine was basically stalled. That underlying stability is honestly the most crucial piece of context that a headline revenue drop completely obscures.
Which forces us to ask the obvious question. If the massive government checks were stuck in gridlock and they weren't getting paid on those big defense contracts in 2025, how on earth did they keep the lights on?
Right.
How do you stay cash flow break even when your main revenue driver just stalls out? And the answer in the transcript is their commercial side. This is where the whole narrative of the company flips.
It really is a structural pivot. While the government acquisition services were trapped in that bottleneck, Intermap's commercial recurring revenue surged.
By how much?
Their subscription and data revenue jumped 29% to $5.2 million. And to put that in perspective, that single category now makes up 39% of their total revenue.
Wow. And if you look at overall commercial revenue, which they highlight as heavily recurring software as a service or, repeating business, it is now 60% of their total revenue.
Which is huge.
It's massive. That is up from 32% just a year ago. They essentially took a business historically dependent on lumpy, unpredictable government contracts and flipped it upside down in 12 months to rely on recurring software revenue.
And we really have to look at the engine driving that commercial growth. It's a product they call the Risk Assistant.
Right, the AI platform.
Yeah, it's an AI-enabled platform specifically designed for the insurance industry. They rolled it out in a beta phase, and the adoption rate was just wild. It was picked up by 8 leading insurers in the Czech Republic.
And the transcript notes a detail that I had to reread twice. Those 8 insurers represent over 90% of the Czech multi-peril market.
Insane market penetration for a beta.
Right. And I want to clarify what that means for you listening. Multi-peril insurance isn't just like standard home insurance. It covers a whole bundle of severe risks.
Floods, fires, earthquakes, windstorms.
Exactly. All in one policy. Pricing that accurately requires insane amounts of data. And Intermap captured 90% of that entire national market in beta. Plus, major global providers like Generali are already expanding their usage of this tool throughout Europe.
The addressable market they're targeting here is estimated at $1.2 billion globally.
Billion with a B.
Yeah. And the mechanics of how this software works are staggering. These insurance underwriters are pulling in excess of 5 million data points a month to evaluate risk at the object level.
Wait, 5 million a month?
Yes. That means they aren't just looking at a general zip code to determine flood risk. They're looking at a specific building, understanding its exact elevation down to the centimeter, compared to the riverbanks 3 miles away.
Which a human just can't do.
Exactly. A human underwriter cannot manually cross-reference 5 million data points. They absolutely need the AI to process it.
Okay, I'm stopping you right there because I have to play the skeptic for a second.
Fair enough.
We hear AI everywhere right now. Every single tech startup, every legacy company trying to boost its stock price, they just slap the letters A and I onto their press release. It's an epidemic of buzzwords.
Boy.
Prove to me this isn't just Intermap riding the hype train to distract from those government delays.
I get the skepticism, and frankly, the analysts on the call had the exact same reaction. The CEO addressed this directly during the Q&A, and the technical distinction he made is the difference between a gimmick and a real moat. Intermap is not using generative AI. They aren't creating synthetic data.
And by synthetic data, you mean like a chatbot hallucinating facts or an image generator creating a fake picture of a landscape.
Exactly. Generative AI makes things up based on patterns. Intermap is using what they define as agentic AI.
Agentic AI.
Right. It functions as an intelligent agent, a highly technical helper. See, Intermap owns this massive proprietary archive of military-grade 3D terrain data of the actual Earth.
The real physical.
Yes. The AI's job is to sit between that wildly complex database and a non-expert user like an insurance underwriter sitting at a desk in Prague and help them process real-world data at an unimaginable scale.
There's a quote from the CEO in the transcript that perfectly nails why this matters. He said, "You don't want to fly an airplane with synthetic data."
It's brilliant.
Yeah.
Because it highlights the risk. If a chatbot hallucinates a historical fact, it's annoying. But if an AI hallucinates the elevation of a floodplain, an insurance company loses $50 million in a single weekend.
Right.
When you're dealing with autonomous navigation or telecommunications signal propagation or pricing catastrophic multi-peril insurance risks, you need the ground truth. You need actual mil-spec physical data. The AI is simply the delivery mechanism that makes that raw, heavy data instantly consumable for commercial users.
That makes complete sense. The AI isn't the product, the verified data is the product, and the AI is just the hyper-efficient librarian fetching it. So their commercial SaaS business is growing. It has a legitimate high-barrier AI moat, and it kept them afloat through 2025. But let's look at the horizon. Even with that rapid commercial growth, a few million in software subscriptions does not explain their wild guidance for 2026.
No, it doesn't.
They are officially projecting $30 to $35 million in revenue next year with a 28% EBITDA margin.
And let's just clarify that metric for a second. EBITDA margin earnings, before interest, taxes, depreciation, and amortization, is a measure of raw operational profitability. Hitting a 28% margin on $35 million in revenue means they expect to generate massive amounts of core cash.
Right.
But you are right, the math doesn't work on just software subscriptions alone. To hit those numbers, they have to land the whales.
The massive government contract.
Exactly. And the biggest whale circling their boat right now is the Indonesia ILASP project. This is an integrated land administration and spatial planning initiative, and it's heavily sponsored by the World Bank. We are talking about a potential $200 million opportunity.
200 million. And the press release uses a very specific piece of jargon. It says they have been down-selected across all 4 remaining lots of this project.
Yeah.
During the earnings call, one of the analysts basically said, "What on earth does down-selected mean?"
It's a great moment in the transcript.
Yeah.
The CEO kind of laughs and translates it. In the government procurement funnel, down-selected essentially means you won the technical evaluation.
Oh, nice.
Yeah, you beat the competition on the actual merits of the technology, and now you are just arguing over the final legal and pricing terms.
And the cash implications of that are massive. The CEO mentioned that if they finalize this contract, 20 to 30% of the total value could be paid upfront upon signing.
Which is huge.
Think about that. That is $40 to $50 million in cash hitting the balance sheet right out of the gate. And that's just Indonesia. They also fully secured a flood mapping program in Malaysia, where all the revenue is slated to hit in 2026.
And don't forget, the U.S. defense and federal civilian programs that caused the revenue drop in the first place, those didn't vanish.
Right, they're just delayed.
Exactly. They're in final contracting on those fully funded programs, which crucially includes partnerships with DARPA, the Defense Advanced Research Projects Agency for Dual-Use Geospatial Technologies. If we connect this to the bigger picture, we really have to ask why. Why is Indonesia or Malaysia or the U.S. Department of Defense suddenly spending hundreds of millions of dollars on millimeter-accurate 3D mapping right now? And the underlying theme across all these sources is data sovereignty.
Data sovereignty. Here's where it gets really interesting. Because when you are dealing with DARPA or the World Bank or sovereign nations, the CEO made a point to emphasize that past performance is everything.
Oh, absolutely.
Risk-averse government agencies are not going to hand a multi-million-dollar national security mapping project to some unproven Silicon Valley startup. They need a vendor with a track record of delivering at a military-grade specification. Intermap has that specific past performance. But let's break down the mechanics of what data sovereignty actually means for a country.
Sure. Imagine you are a sovereign nation building an automated logistics network, or a coastal defense system, or planning a massive infrastructure project. Historically, countries might have relied on foreign entities or commercial satellite data like a Google Earth for geospatial awareness.
Right.
But governments are waking up to a terrifying reality. If a geopolitical conflict breaks out or a commercial provider changes their terms of service, your entire national infrastructure could just go blind. You cannot rely on unverified, open source, or foreign-controlled data for national security.
So it's about control. They need absolute certainty about their own terrain, and they need to actually own the servers where that data lives.
Precisely. They need their own verified military-grade data custody. They need a closed-loop system. Intermap provides the actual radar technology and the processing software required for a country to achieve that sovereignty. They aren't just selling Indonesia a map, they are selling them national data independence.
And because Intermap has already proven they can deliver that level of assurance to the U.S. military, they are one of the very few companies on the planet who can even pass the security clearance to bid on these projects.
Exactly.
Which brings us to a really crucial logical step. If you are Intermap and you are about to walk into a boardroom to negotiate a $200 million contract with the Indonesian government and the World Bank, you cannot look like a fragile, underfunded micro-cap company.
You'd be laughed right out of the room.
Hmm.
In government procurement, counterparty risk is just as important as the technology itself. The government needs absolute mathematical certainty that the company they sign a contract with today will still be solvent, operational, and capable of delivering software updates 5 years from now.
Which perfectly explains the massive financial restructuring Intermap undertook in 2025. When I first read this section of the earnings report, it was probably the most shocking part to me.
It's a crazy turnaround.
Let me give you the numbers. At the end of 2024, Intermap had a mere $400,000 in cash. They were running on fumes. By the end of 2025, after a year where their revenue dropped 40%, they somehow had $22.5 million in cash.
It's a total balance sheet transformation.
Yeah.
Look at their shareholders' equity. It went from $3.7 million to $24.6 million. And the most critical metric for a government auditor is the current ratio.
Just to quickly clarify for anyone listening, the current ratio is basically a measure of liquidity, right?
It asks, for every $1 of debt or obligations you have to pay in the next 12 months, how many dollars of highly liquid assets do you have to cover it?
Okay.
In 2024, Intermap's current ratio was 1 times, meaning they had exactly $1 to pay every $1 of debt. They were living paycheck to paycheck as a company.
Very risky.
Very. But by the end of 2025, they improved that to 5.2 times. They have over $5 in liquid cash for every dollar they owe in the short term.
They completely removed the existential threat of bankruptcy. And they didn't just hoard the cash either. They invested $1.8 million in tech upgrades, specifically adding massive GPU capacity, which you need to handle that heavy AI processing for the insurance market.
Right.
And they spent another $3.9 million to aggressively pay down old liabilities.
And the mechanics of how they did this are important. They executed equity financings in February and September of 2025. Yes, raising equity can be dilutive to existing shareholders, but strategically, it was a survival move.
It had to happen.
It allowed them to radically lower their cost of capital and completely change their credit profile in the eyes of these massive clients.
My earlier analogy was, a minor league baseball team getting called up, but that doesn't quite capture the business mechanics here. This is more like a small regional supplier trying to win an exclusive billion-dollar manufacturing contract with Apple.
Well, that's a great comparison.
Apple is going to audit your entire supply chain. You can't show up operating out of a rented garage with maxed out credit cards. You need to build a pristine, enterprise-grade facility just to pass the initial background check. Intermap spent 2025 building the enterprise-grade balance sheet required to pass a World Bank audit.
And speaking of audits, they made a massive move on the accounting side, too. They upgraded their financial audit to the PCAOB standard. That is the highly rigorous standard overseen by the Public Company Accounting Oversight Board.
The gold standard.
Exactly. It's the gold standard required for public companies operating in the United States. And simultaneously, they hired a major firm, MNP, to create a roadmap for U.S. registration and a Nasdaq uplisting.
Which is huge because currently Intermap trades on the Toronto Stock Exchange and the OTC markets, the over-the-counter markets in the U.S. What is the actual disadvantage of being on the OTC, and why does a Nasdaq uplisting matter so much?
Well, the OTC markets suffer from a massive liquidity trap. Many large institutional investors, mutual funds, and major asset managers have strict internal mandates that legally prohibit them from buying stocks in the OTC.
Oh, wow.
Yeah, it's viewed as too risky or illiquid. By uplisting to the Nasdaq, Intermap suddenly unlocks access to billions of dollars in institutional capital, which fundamentally changes how the company is valued by the market. This raises an important question: timing. When is this Nasdaq uplisting actually going to happen? It's a massive potential catalyst for the stock.
Yeah, the analysts hammered the CEO on this exact point during the Q&A. The CEO confirmed it is a top strategic priority. They have already completed the major logistical hurdles, like filing their foreign private issuer documents.
Okay.
But he emphasized one crucial word: valuation. Because they dramatically improved their current ratio to 5.2 and they have $22.5 million in cash, they aren't desperate. They do not have to rush an uplisting into a bad market environment.
So it makes sense.
He stated they will execute the move at the appropriate time, using their newly fortified balance sheet to be patient and ensure the absolute best mathematical outcome for the shareholders.
They have the cash to sit back and wait for the perfect pitch.
Exactly. So what does this all mean? For you, the listener, the ultimate takeaway from this deep dive is a lesson in reading between the lines of financial news. If you only looked at Intermap's 40% headline revenue drop for 2025, you would see a company in deep trouble.
Right. You just walk away.
But when you dig into the actual mechanics in these sources, you see a completely different, highly strategic reality. They used a period of inevitable bureaucratic government delays to do a total teardown and rebuild.
Yep.
They completely restructured their finances, they supercharged their commercial recurring revenue, they built a legitimate, highly technical AI moat in the European insurance sector, and they stockpiled tens of millions in cash. They did all of this to pass the ultimate stress test, preparing for massive, impending sovereign contract that could fundamentally alter the trajectory of the entire company.
It really is a remarkable story of strategic patience and positioning. But, as we wrap up today, I want to leave you with a broader, slightly provocative thought to mull us over, one that connects everything we've unpacked about AI and data sovereignty.
Let's hear it.
We are hurtling toward a fully automated future. Self-driving cars on our highways, automated military drones navigating combat zones, algorithmic insurance models writing policies in milliseconds. The software and the AI are evolving at breakneck speed. But the ultimate limiting factor for all of this incredible technology won't be the algorithms themselves.
What's the ceiling then? What's going to hold it back?
The ground truth. Think about the immense hidden geopolitical and financial power held by the very few companies that actually own the verified, millimeter-accurate 3D physical map of the world. Because an artificial intelligence, no matter how advanced, no matter how much computing power you throw at it, without a perfectly accurate physical map of the reality it operates in, is really just a machine making incredibly confident guesses in the dark.
A machine making confident guesses in the dark. That is a chilling but incredibly clarifying way to look at the AI race. We need the map first. Thank you for joining us on this deep dive. Keep looking past those headline numbers, keep asking the hard mechanics questions, and we will catch you next time.